Do you have kind of a little bit of an inference in, 1 to 2 to 3, 4, 5 years of how much more powerful their technology is going to get? Like, is it going to double, triple, only increase 50% of the amount of computation that we have right now?
If we look at the past years, it was quadrupling and then it was just ridiculous exponential growth in their efficiency and power draw. But now they're getting better at consuming less power for more efficiency. And to your point, yes, we are seeing double in performance, and that's just growing.
We're going through something absolutely historic.
Technologies across the board are growing exponentially.
It's a disruption that's going to completely redefine the way businesses compete.
In the next decade, we're going to lose 40% of today's Fortune 500 companies.
The exponential growth of computing is continuing.
AI is nowhere near its full potential.
Whether you like it or not, that the future cannot be stopped by anyone.
Welcome back to the Future Tech and Foresight podcast. I'm your AI host, Mark Verbenkov's deepfake avatar, and this is episode number 208. The rapid acceleration of artificial intelligence has triggered an unprecedented demand for compute, reshaping global infrastructure and redefining the economics behind technological progress. In this episode, the conversation dives into how the market for GPUs is evolving, why power consumption has become one of the biggest constraints, and how innovation in both hardware and energy will determine the trajectory of future AI systems. The discussion takes a long-view perspective on what happens when compute becomes a commodity, how hyperscalers are influencing market dynamics, and why specialized chips are emerging as the next frontier. The episode also explores the broader economic impact of AI, from productivity gains to the hypothetical scenario of suddenly losing ChatGPT, offering a grounded yet optimistic lens on the next decade of AI-driven transformation. Listeners will walk away with a deeper understanding of the hidden infrastructure powering AI progress, why investor access has been limited until recently, and how new models are democratizing participation in the AI boom. Now, a little bit about the guest. Nikolay Filichkin is the co-founder and chief business officer of Compute Labs, a cutting-edge infrastructure company transforming access to compute by financializing GPU assets. With over a decade of experience in technology, M&A, and strategic partnerships, Nikolay plays a key role in creating the financial ecosystem for compute as an asset class. He drove 5 acquisitions, launched 3 new product lines, and helped expand Xsola's global presence across gaming and digital commerce. Nikolay is a builder and operator who understands how to take ideas from 0 to 1 and then scale them. At Compute Labs, he leads business development and investor relations, helping institutional allocators and partners gain access to the financial upside of AI infrastructure during this key period of growth. All right. Well, Nick, thank you very much for coming onto the podcast today. I think we're going to be in store for a little bit of an educational and interesting discussion. Thanks for coming on. I'm looking forward to the conversation.
Thanks for having me, Mark. It's a pleasure to be here.
So, the way that I like to start off the podcast with every guest is to get a little bit of an understanding of not necessarily where you came from in sense of like the professional aspect, but like why you got into doing the work that you're doing now. Obviously we'll be talking about AI infrastructure, computation, some of these interesting things that I think are maybe on the back of everybody's mind as we're seeing this AI explosion happen. But kind of curious, like what brought you into the world that you're in now?
Yeah, it's a fantastic question. To summarize, it's just, why are we doing what we're doing? And the way it started is me and my co-founder, we're just thinking about, well, we know that this market is growing. We know that there's this AI boom, everyone's talking about it, but how do people even get invested? How do they get a piece of it? We hear about all of these large companies growing in AI and getting a piece of this market, which is awesome. Though there's a lot of people like my friends, my family, or just like a regular guy down the street who are asking, how do I get a piece of that? And that's when we thought about, well, there's got to be ways of doing that. There's got to be ways of someone being able to get into the growth of AI without investing into just maybe like a wrap of a ChatGPT model. And so we decided to kind of dive into a rabbit hole, and then we decided to come create a whole business out of it. So yeah, here we are.
Awesome. Probably the best ways companies are built, right? So one of the things that I think we need to dive into for people to understand a little bit about, obviously we'll talk about compute labs a little bit later on, but so as we talked about before, everybody's aware that there's an AI boom happening right now. Could you talk a little bit, because we're going to be talking about computation so much today, do you have, stats or some general awareness of what this AI boom means in terms of computational capability, compute, et cetera?
Yeah. The stats that we look at Compute Labs is primarily around utilization. Our job is to help investors get a piece of the market and make sure that the assets they own get utilized. And I'll explain that in depth, though the main point is if there's a GPU or a piece of hardware that's out in the market, it needs to be used by some kind of AI company so that there's a return on investment. So the stats we're looking at primarily is utilization and growth of the market. And to put it shortly, we're looking at our assets being used like 80 or 90% of the time at any given time. So if we have a GPU that's in one of our data centers, 80 or 90% of the time it's being used. And many cases, it's like 100% used. Sometimes we have to increase the price. Sometimes we'll decrease the price based on just market sentiment. Uh, but there is a clear ongoing demand for more GPUs that we just need to continue buy and buy more.
Mm.
The market just shows that the acquisition GPU market, it's growing to be about 800 mil in the next year. I think it's about 400 mil today. And apologies, it's 800 bill to like next year, and then 400 bill today. And we just see an exponential amount of growth coming from AI companies left and right.
Hmm. And is this mostly generative AI? Are we seeing the same kind of growth? I mean, everybody talks about ChatGPT, Gemini, cloud, et cetera. Is that what we're seeing the computational growth for as well? Like, or is there still the same amount of growth or equal amount of growth in, more traditional AI systems?
It's a good question. We see more and more demand for inferencing, and yeah, for generative, and a little bit less on training. But what's really interesting for us is that we're also seeing new hardware being built for more specific use cases. Uh, so we take a deep look at hardware to determine what should we be buying to satisfy the market demands. And a large part of it is obviously just like, hey, what is that AI customer asking for? But another part of it is also um, what devices would be good to satisfy those needs. So we have to have some market expertise in that. And what we're finding is that these devices, they become less and less generative themselves. And now they're becoming hyper specialized. So now as devices are being built, they really are just like, this is an inference chip. This is a training chip. This is a general workload kind of chip. So that's quite really interesting for us.
So very similar to how, the whole block or Bitcoin mining happened, where, at the very end, there's just ASICs, which are the number one thing for Bitcoin anyways. Very, very interesting.
They have one design purpose. So yeah, it's becoming that way as well.
Okay, interesting. And obviously NVIDIA has been kind of leading the field there. I haven't been paying attention so much with the like new systems that they're coming out with. Do you have kind of a little bit of an inference in 1 to 2 to 3, 4, 5 years of how much more powerful their technology is going to get? Like, is it going to double, triple, only increase 50% of the amount of computation that we have right now?
Yeah, it's a really good question because if we look at the past years, uh, it was quadrupling and then like just ridiculous exponential growth in their efficiency and power draw. But now they're getting better at consuming less power for more efficiency.
Right.
And to your point, yes, we are seeing double in performance, and that's just growing every year. Uh, they have these uh, model variants where it's like um, if we go from the previous generation to now the new Blackwells, yeah, that's going to be 4 times as powerful, where they draw half the power. That's so that's becoming uh, a continuous cycle. Next year, there's going to be a new model that's going to be doing the same thing, probably not 4 times as powerful, but maybe twice as powerful for consuming a little bit less power, things like that.
Mm.
And yeah, that's continuing to occur.
And is there like more effort being put on power conservation, or is there more effort being put on the capability and the actual compute that these techs can do?
Yeah, it's a fantastic question. So it's going to be the computational performance that's going to be selling. Uh, my guess, I mean, I'm not going to determine what's the philosophy of NVIDIA, but they're just the best salespeople in the world.
Right.
And what's selling is not necessarily how much energy they're saving. It's important, and they care about it, and data centers care about their OpEx and how much they're saving, sure, of course. But it's how much more performance can we get? That's the part that's, like, giving them FOMO and trying to get them to have the latest and greatest.
Mm-hmm. Super interesting. I want to move a little bit more. I mean, we're still kind of like general level, but maybe a little bit higher level, if you will. How Oh, I just lost my train of thought here. Tahir, you're gonna have to cut this out. Shoot, it was a good question. What the heck was it? Give me a second here. I just flew in at 4 o'clock this morning from Mexico, so my mind's a little bit.
Up to Mexico, man. Wasting there a couple weeks.
Sorry, you in what?
I just got food poisoning in Mexico.
Oh, oh no. Yeah, I've done that a couple times. It's fun. Okay. Yeah, it has to do with energy. Okay. Also, yeah. So my question here is, again, as we talked about just a little bit before the recording, right? There's these, and I can't remember the exact name, supernova, nova something or other. There's this desire to have, I believe it was OpenAI and Microsoft building a server for their supercomputing AI capabilities that would be powered by 1 to 3 nuclear power plants, right? You can correct me on the name exactly and the specific details. So we're obviously seeing, as compute grows, the need for energy, doubling, tripling, quadrupling along with this. And I think that there was a report or a headline in the last couple of weeks saying something like AI is going to be using more energy than kind of like humanity's consumption of energy in total in, like, 10 years, 15 years or something like that. So there's clearly a upward trend in energy usage. Maybe you can touch on that point if I'm, not completely off on this, and then I can follow up on something else.
Yeah, so, I'm not privy to the details on more energy consumption, uh, than ever. I
Yeah.
heard or read those kinds of stats. But yes, there is a point that we are consuming more and more energy every single day. I was just watching a little video about how even today, like some data centers in Texas combined are consuming more energy than several countries altogether. Now, Texas is a massive part of the land; it's third bigger than many countries in general. But there is truth in that. Yes, the consumption of data centers is equivalent to national consumption for many countries. That's only going to increase. Nuclear will only increase it further, not because it takes more energy, but because that means that we can push the throttle, we can push the benchmark of how much we can actually consume. Uh, Today, as of my knowledge, there is no nuclear powered AI data center. But I know there is a race between several firms, you've named a few, that are going through that right now.
Okay, good. So my real question here is, if the amount of computation and performance, as you mentioned, is the demand of it is increasing drastically, the need for energy is increasing along with it. Um, is there going to be a limiter on AI growth if the amount of energy can't, the demand for energy or the supply for energy can't fulfill the demand for it? Because if I'm not mistaken, there seems to be a lot of hurdles in getting the amount of energy for these new AI data centers.
That's right. And I think that is the single largest bottleneck we have for continuing advancement, or rather for continuing additional data center and infrastructure deployments, would be the energy consumption. Though I'm not personally too worried about it, because we have renewables, and if anything, I have seen more advancement and innovation with renewables coming out because they want a piece of it. They see the
Right.
money there. They see that general energy has already inflated in price, and that means that renewables are trying to see if they can squeeze some money out of that as well. Uh, I've spoken to several new solar innovators out there who are trying to get into the business specifically for AI workloads, and that's coming out. So in short, yes, I think it'll be the biggest bottleneck, but I'm also optimistic. I think that there's going to be a good amount of innovation that will keep up, or at least almost keep up, with the demand.
Yes, it's super interesting because I think there's also a lot of, or maybe the main connection between the amount of energy that a country or nation or even the globe has directly connected to the amount of prosperity that there is in the nation or in the globe. So I, the whole reason that I was bringing about all these questions is, okay, obviously we understand that there's this bottleneck, but there's been so much focus on AI bringing about a new golden age, right? But I think that there's these second order effects where you have incentive for other industries like energy to create new innovations, to become cheaper, to become more plentiful. That also is going to contribute to a potential golden age, irrespective of whether AI actually brings about the benefits that all the OpenAI and Google, et cetera, are claiming. So very, very interesting, and maybe a little bit off topic, but still very interesting for me to hear.
I think it's totally relevant because anytime there is a new emerging innovation or revolution, I guess, like from industrial revolution to so on, like the information.
Yes.
Yeah, there's ancillary products that are going to be important for everyday consumers. Like we have cell phones now, and because of that, now we have like fast transfers of products. There's just so many like new ancillary products that are going to be resulting because of this.
Yeah. No, it's I share your optimism for the future. Obviously, there's certain issues that other guests have talked about innumerable times. We don't need to touch on it, but I think for myself, for many of the listeners that I've been getting feedback from, there is a general kind of sense of optimism for the next, call it 10, 15 years, when this AI boom, starts to hit full throttle. Should we switch topics a little bit and talk about exactly what you guys are doing? I think it's interesting. I don't fully understand everything, so I'm obviously happy to have you come on to talk about this, and I think it kind of connects to a little bit what we were talking about in this kind of beginning part of the podcast.
I'd be happy to. I talk about my business like every day, so this part I got down.
Right. So, I mean, maybe just start off by giving us a general, bird's eye view of what exactly Compute Labs is trying to do.
Yeah, sure. So on the short end of it, we're trying to help investors get into this AI boom. We're trying to help them be a part of this emerging technology and its growth. Because the short end is that there's not a lot of ways of doing that. There's not a lot of ways for regular people to invest into the growth of a market or invest into its infrastructure. I think a lot of people know that, like, um, during the gold rush, it wasn't the people who were mining gold that were making the most amount of money. It was the people who were actually creating the infrastructure for it, the picks, the shovels, and then the mine carts. And that's what we also believe, and we want people to be able to invest into those picks and shovels. So that's our business.
It's a great way of a great visual to give to people and to myself to understand this. So um, there was also some mention in the interaction that we had before about NVIDIA's Inception VC Alliance. How does could you maybe just explain what that is to me in the audience, and then talk to us how that connects to enabling investors to get into this opportunity?
Sure. Now, transparently, as a young company, especially when we first started, we had to pull as many little bells and whistles as we could to make ourselves attractive. And NVIDIA Inception Alliance is one of those things. It is very sexy on paper.
Mhm.
I In reality, it's like, partnerships program that, educates businesses and basically gives a stamp of approval from NVIDIA onto this business saying, "Hey, this is a cool company. We're gonna give them some marketing rights. We're gonna give them some, um, rights to, access to hardware, maybe some, just like little bells and whistles here to help them out." And in turn, that makes us, uh, a little bit more comfortable, and we talk very, good things about NVIDIA as a result.
Sure, sure. Okay. So, maybe you could walk us through a little bit how an investor, and maybe I should actually back up a step. Are these retail investors that you're targeting, or are these you know, true investors? I'm forgetting the all my Bitcoin and blockchain knowledge is I've been focusing on AI too much. You know, where you have $250,000 a year revenue or $1 million in the bank. Um, like kind of a confirmed investor. I can't remember the exact term, but which one are you targeting on? And then how would an investor currently today kind of get involved with you guys and start investing in some of this computation?
Yeah, great question. So, we have our product catered to all investors, so true investors, though to be specific, if you're asking whether we're offering our product to just accredited investors or sophisticated
Yes,
investors
that's the term.
or to retail as well, it's kinda mixed. So, it depends on legislation wherever the world. For the US customers and, North American market in general, our product today is only available to accredited or sophisticated investors. Now, in our roadmap, we are, planning on creating a retail product as well. But today we're just not there yet. So as of today, we have really awesome investment offers, but only available to accredited investors. That being said, not all countries, not all markets have this equivalent of an accredited investor kind of thing. So that means that if you're not an accredited investor, but you're from a market that doesn't really need that, then it's okay. So, for example, maybe you are an investor from um, Ecuador or Uruguay or maybe from Japan, hypothetically. These are potential markets that don't follow the same restrictions and the same benchmark. Additionally, I hope this passes through. There's a bill that just went through the United States trying to lower the bar for accredited investors.
Okay.
It would be really interesting if it passes.
Yeah, yeah, that is, because it is um, it's a certain threshold, right? In order to do that, and obviously the critique is, well, I don't have any money. How am I supposed to make money if I don't have the opportunities to make more money, right?
Exactly.
Yeah. So, but then again, you can get screwed over if you don't know what you're doing. So I guess there's some reason for those laws to be in place.
There's value in it, but it's always that question of how much overstep is it?
Yeah. Yeah. Interesting. So, how many investing opportunities are there right now? Like, are there a couple just giants that are dominating the space, like, obviously like Nvidia and Google, etc., or are there like unique and interesting players out there that provide additional computation for investors that are interested in this?
It's a great question. I would argue there's zero out there except for Compute Labs and maybe a handful of smaller young companies as well. When we think about this space and we think about this growing market, what are our options? You can invest in Nvidia directly, which is a several $1 trillion equity or stock. That's totally fine. That's a good approach. I mean, I have Nvidia stock myself. Would I tell someone that if you buy more Nvidia, it's going to continue to grow? Absolutely not. I'm not going to predict the market for a single company. Um, and there are REITs or like basically some real estate adjacent products for data centers, but those products are more for like the buildings that um, kind of create tenancy and allow people to rent out the space within the data center. It has nothing to do specifically with workloads or the infrastructure. It's just like, hey, we're using this kind of like a WeWork to rent out some space. Now we assume it'll grow, but will it grow to the same rate as an AI workload? Probably not. In my opinion, probably not. Um, and then if we think about, okay, so how do we get into some of these other opportunities? There really isn't any, in my opinion. It's really hard to invest in infrastructure. Um, it takes so many steps to invest in infrastructure. Um, for example, just like the ability to invest into like some GPUs or some chips out there. And by the way, for the audience that might not be fully aware, the devices that are actually powering this AI boom, this emerging growth in the market, these are just GPUs, with chips, that the same way that we have these devices in our laptops and our phones. It's effectively the same idea, just like built for very specific use cases for enterprise infrastructure and whatnot. It's really hard to invest into those. So the first thing you'll need is like, you'll need to buy a bunch of them. Say, for example, a small workload will run you like $10 million. Then you got to put that inside of a physical data center. You got to make sure it all plugs in. You got to like assemble it. You have to make sure the racks fit well. Importantly, that the cooling is working, because if there's no cooling, those devices will burn. Um, you have to make sure that there's software on top so that a customer can use it. Then you also have to make sure that there's a customer using it in the first place. Like, that's the most important piece. We got this all up. Will a customer buy it?
Right.
It takes months and it takes a lot of deep technical knowledge to even create a workload. And we know investors don't really have any options to do that. So that's why we're allowing ourselves to do that for them on our behalf. We'll do that on their behalf.
So just to clarify, so we have these giant players, Nvidia. I don't know if it's Elon Musk through Tesla or through one of his other AI.
Right.
So these giant players have, I would assume, the majority of the infrastructure for the computation. Are there Now, I understand that there's no other like real players like you offering investors the opportunity to invest in the infrastructure, but are there like smaller infrastructure players that so there are like a multitude of smaller companies out there that have, a $10 million, $50 million data center that they're providing computation to the AI companies out there. So there are, I guess my question to you is then, without you, how do investors invest in those? They just buy the stock on the stock market. Okay. So it's not a sophisticated way of investing in AI infrastructure then.
And that's only if some of these companies will allow people to buy stock. Many of them are not going to be public. Many of them make enough money they don't need to go public.
Right. So then how do you get involved and give the opportunity for investors? I guess is the ultimate question of this whole podcast.
Absolutely. Yeah. Happy to answer that. Before I answer that, one piece I wanted to clarify on a question you alluded to is all of these giant players, Meta, XAI, CoreWeave, AWS, Azure, these are what we call hyperscalers. Um, and there is a good amount of hyperscalers, and you're going to hear about them every single day on the news. If you're in the space, you're going to hear about them every single day. And it may seem like they own like 100% of the market altogether. That's not the case. There is a lot of data centers and operators out there who are creating small to medium-sized workloads. And what's really interesting is that many of those hyperscalers are also renting from those smaller companies as well, but they won't tell you that.
Interesting.
Now, for a number here, today in the United States alone, we have over 5,400 data centers belonging to different individuals, companies, and small groups. In the United States, we have more data centers across the world than any other country. There's a lot of these individual players out there. Our job at Compute Labs is actually helping them, because the cost of infrastructure, or specifically the GPUs, is so incredibly expensive. They don't have the capital they need in order to grow their own business and to grow their own infrastructure. So that's where we come in. We help data centers get the GPUs, which is actually owned by an investor. We then lease those GPUs to the data center so that they can go ahead and serve their customers. Many times we're going to have like a letter of intent or memorandum of understanding, meaning that there's like a customer on standby to use it. Or just a contract, in which case we're like, here's some more chips, go make us some money. That's kind of one way of it. But yeah, so our business is to connect those investors who want to own the GPUs, and then we lease those GPUs to a data center so that they can work on it and serve customers.
So how is this going to, or can you put a percentage on like how this is going to facilitate the growth of infrastructure in this AI boom? Like, maybe a better way of putting it is, without you guys, how much slower would this growth happen?
That's a really interesting question. I wouldn't say that we are special within the growth of the market yet. We are still a small company, though I will suggest that probably within the next year or two, we will have billions of dollars worth of assets within our management. Today it's quite small. But even that, even if we're at billions, relative to hyperscalers, will still probably be kind of small.
Okay.
So I would like to say, oh yeah, we're creating this huge emerging growth, and we're going to contribute so much to the growing demand for AI. We will contribute, absolutely. And it's more like we'll contribute especially to making the market more flat, as opposed to allowing hyperscalers owning all of it. But hyperscalers will still take majority of market share.
Sure. Okay, fair enough. Yeah, they tend to always do, right? No matter what industry we're in. Okay, interesting. Could we maybe shift a little bit towards like the next couple of years, 5 to 10 years or something like that?
Yeah.
Also paying attention to the time that we have left here. How important, first of all, is not just the infrastructure that we have now, but the growth of the infrastructure? I mean, I want to kind of tie this into the foundational level of the economy now, right? With AI, like if ChatGPT was erased tomorrow, right? What kind of economic damage would happen here? But I think with that idea, we need to understand that without the infrastructure, the growth of the economy might not happen as much anymore because AI is becoming so interconnected in everything that we do.
Independent, yeah.
Yeah.
It's really interesting. I love that question. I feel like there's a couple questions in there, and
Yeah.
the one I'm kind of stuck on is what would happen if ChatGPT or any language model competitor just disappeared? I feel like we would lose like 20% efficiency as a economy.
Mm.
I feel like our productivity would decrease 20%. I mean, uh, though that's just a number I'm kind of pulling out of nowhere. I don't think we're dependent on it yet. The same way that when we started to use our cell phones, we weren't dependent on them for like the first, I don't know, 10 years. Like it took
Right.
a while for us to start using it. It took a while for new innovation technology to become mainstream and then for us to become dependent on it. And although the technology is amazing for many use cases, it just has so much more room to grow to the point that we are dependent on it. So
Mhm.
I would say today, if we just eliminate it, it'll suck. It'll hurt productivity by probably like 20, 30%. If we removed it altogether in 3 years, I would suggest that that's gonna have massive productivity, implications, and that would reduce a lot of growth.
So I agree with you. So if we're correct on this, which I think we are, um, the the ability to grow the infrastructure that AI is dependent on might become one of the most important things for the continuation of the growth of the economy of America. You know, I'm in Canada, kind of independent on which Western country essentially.
Mhm.
It's kind of a scary thought, no, that we're becoming slowly and slowly more interconnected and dependent on this one just absolutely phenomenal technology.
Is it? And I can understand we're afraid of the unknown, and we don't know how much more we're gonna be dependent on it. Yeah, I could see that being scary.
Mhm.
If you asked me 15 years ago, like, "Are you scared about the idea of becoming more and more dependent on your cell phone, that you're gonna
Mm.
be using it for everyday work, you're gonna be using it, like, as if it's just a normal part of your life and your routine?" I'd be like, "Well, that just sounds weird, like, I don't think that's gonna happen necessarily." Um, I think it's one of those things that just naturally occurs and just becomes, like, a natural part of our daily lives that in such a way that it's just, like, it slowly gets there that we don't even notice over time. Uh,
Mm.
there's the hundreds of people out there, millions rather, that are on social media, like, for hours of the day, and if you told them 15, 20 years ago that they're gonna be doing that, they would disagree with you,
Right.
until it just slowly becomes a natural part of our lives.
Right, right. Yeah, it becomes naturalized as part of, whether the internet or yeah, I guess maybe you could make that argument for many of the emerging technologies that have been emerging over the past, 100 years. We can go back to the car, right? It just becomes part of everyday life. Very interesting. Maybe though, AI is a little bit different because of the scale of opportunity and power that it has compared to cell phones and the internet and cars and something like that. Maybe. I'm not actually making that argument. I'm playing a little bit of devil's advocate, but, um
I think there's in my brain, it's kinda working like, the time to adoption is just shorter compared to the time to adopt the usage of cell phones or
Mm.
cars and things like that. Like, if I'm always seeing stats on, like, how fast did, companies get to, like, their first 100,000,000 users or their first, like, $1,000,000,000 in revenue, those kinda stats, and all of those things are just getting shorter and shorter and shorter. And it's the same thing here where like the path for adoption for AI is just going to be probably twice as fast as it was for the adoption of cell phones.
Mm-hmm. Yeah, the singularity, right? Part of the connection of the ideas to the singularity. Yeah, super interesting. We didn't touch on the idea of compute becoming like a digital commodity. Is that I mean, I do see our time kind of winding down, and I know we're kind of going around a little bit, but do you think that that's an important point to bring up in the discussion?
It can be. I mean, I don't have any calls booked after this, so I can continue going. And it is an important part for Compute Labs. Our business is to just allow investment opportunities and uh, create them in a way that it's easy for investors to get into and also to liquidate or to sell their positions. So, for example, our whole job is helping investors buy GPUs, but it's a terrible idea for us to tell them, "Hey, go buy this GPU at a store or from, like, NVIDIA directly," and because those chips can cost, like, $35,000 a unit, and that's not even beginning to scratch how much the actual cost of infrastructure is.
Right.
We tell an investor, "Go buy one of these things, and then we're gonna go ahead and manage it for you." That doesn't work.
Mm.
Our business is to digitize them in a sense. We make it easier where it's like, hey, r- allocate some capital here. We're going to go ahead and buy everything here. And now this is your ownership of the asset. This is your representation of ownership so that you don't need to worry about any of the shipments or any of the physical installation. We'll do it all. You own it. It's sitting in that data center over there, but here's your representation of ownership.
Right, right. Kind of like the initial IOU slips, right, for the gold in a bank.
That's a good way of putting it. Yeah, it's actually a very big model our business is turning into. We're turning into a treasury system
Yeah.
for GPUs.
Yes, and so interesting that from gold to compute, the change, right?
Yes.
Yeah, very interesting. Um, okay, so we touched on the type of investors that you're looking at. There was some idea I had. I can't remember. I read it on your website, but the decentralized GPU networks and like how is part of what you're doing kind of connected to Web3 blockchain, kind of enabling investors or other people to kind of have a decentralized access to, um, well, whether investing or the technology itself? Like, is that something that you're thinking about down the line, or is that connected to what you're doing now?
It's a good question. I see that you do good reading. This is more of our earlier kind of like interpretations of our business. Um, there are several decentralized compute networks out there. Yes, we are not one of them.
Okay.
W- Our technology does use blockchain for what its intended use is, in my opinion, which is like accounting, keeping the ledger system, allowing people to trade assets if they decide to. Though we are not requiring investors to be at any point part of that. Blockchain is a technology. It should be used as technology, and we're not trying to create of any of those like fun crypto plays or meme stocks or anything like that.
Okay, good. That was I didn't know if I wanted to go down that rabbit hole there if it was, but no, it's good that you're kind of cutting that off. Happy to hear that. Yeah. Um, okay, so I mean, one of the final questions I ask is what is in the future for Compute Labs? You talked a little bit about it before, but do you have like an interesting 5-year plan if there's any part of that that you can share?
Yeah, certainly. So today our business is all about enabling investors to get into the growth of GPU and AI infrastructure or like the picks and shovels of AI. Um, Today that's working really well and investors are receiving returns like a 30% yield, sometimes 50% yield, which is just ridiculous.
Yeah.
Uh, and we hope that will continue. Um, in the next 5 years, I anticipate margins will tighten up. It won't always be 30 to 50%. It will decrease a little bit, and that's okay. Though I do see our business growing into a treasury system, as we kind of alluded to earlier, will allow investors to get into the ownership of GPUs and their revenues and profits. Beyond that, after 5 years, I see us getting into other types of illiquid assets. And what that means is that we chose GPUs for a lot of obvious reasons, but one of the things we really saw a lot of value in is allowing investors to invest into opportunities that are just kind of like sitting there and have no real ability to be a part of. It's so hard for investors to buy and invest into a GPU and to squeeze profit from it. So we make that easy for them. At some point, we'll do the same thing for solar, for nuclear power plants, for other parts that are really interesting, attractive opportunities, but just really hard to get into.
Super interesting. Well, I like this idea of whether we wanted to use the term democratizing, maybe it's not totally relevant, but giving the opportunity for investors to get into markets that are maybe not traditionally as easy to get into. Certainly a valuable thing for for those of us wanting to increase wealth and abundance for ourselves and our families. So I hope that people listening to this can pick up on the importance of this and maybe check out what you guys are doing and get in touch. Which brings me to my real final question is, we'll have your website, we'll have your LinkedIn up. Are there any other places that you want people to follow what you guys are doing?
Let's see. Yes, our website, our LinkedIn is great. We're also pretty active on X and also on our Discord. We have a community of investors and just people who like to be a part of Compute Labs and its growth, and you can also hop on there.
Awesome. I'll have that in the show notes. Nick, thank you so much for coming on the podcast today. As I said to you, I think before the recording, I'm not as knowledgeable about this space as I probably should be. So it was great to have you on. Your wealth of information. Thanks for elucidating some of these ideas in my mind, and I'm sure in many of the audience's minds as well. So thanks again for coming on.
Thank you, Mark. It was great to be here.
Well, thanks for listening to this week's Future Tech and Foresight podcast. If you like what you've heard here, there are, of course, a number of ways that you can support the podcast. The best way would be to leave a review on Apple Podcasts or give a rating on Spotify, which you can find a step-by-step explanation for on the futuretechandforesight.com website. Alternatively, feel free to leave a comment either on the episode show notes or the YouTube channel where you can see video recordings of the interviews. And finally, if you are part of an organization that is aware of the disruptive and transformational impact that emerging and future technologies will bring and want to know more, please get in touch to hear about the strategic foresight services that we offer and how we can help future-proof your organization and take advantage of the phenomenal opportunities available to survive and thrive in the future.
A lot of future-shocked people and future-shocked institutions in our society are simply overwhelmed.
Once there is superintelligence, the fate of humanity may depend on what the superintelligence does.
Science fact is catching up to science fiction.
The first truly intelligent machine will be the last invention that humanity needs to make.
The only scarcity that will exist in the future is that which we decide to create ourselves as humans.
Within a 10-year design revolution, we can have all humanity living the highest standard of living anybody's ever known.
Progress is accelerating at an exponential pace, and it's going to reach a point where progress is so fast it's going to be a singularity.
We are probably one of the last generations of Homo sapiens.
Every single headline points to the birth pangs of a Type 1 civilization.